Welcome back. It has been a volatile session for most sectors, including the Indian rupee as well, which started on a very choppy note. There you can see it. We closed nearly 0.25% on the lower side, but not before the rupee touched a high of 63.30 in the intraday market there. We started on a positive note, but after that, it was the Indian equities which really declined sharply, the US dollar as well, and the crude prices gain up is something that also started bothering the currency. Let's get on board then. Abhishek Goenka, who's founder and CEO at India Forex Advisors. He joins us live for this leg of the show. Abhishek, hi, good to have you. What's your sense on what the rupee really seems to be doing?
I think if you look at the rupee, what really worked for rupee earlier was, everything was going good in terms of money coming in, the debt and equity markets. The political environment looked stable and, everything was very, very positive. But now things have suddenly changed. The crude, which was earlier expected to go down further, is now going up. Now, the equity and debt markets, I was just looking at data from August 2013. I mean, this is the first month where the debt and equity both is negative. And at the same time, earlier, when the dollar used to be strong outside, the rupee used to be strong here. But now when the dollar is weak there, the rupee is also weak here. So that means there's a pressure coming in the rupee. So I think because of all these reasons, even though the dollar is getting so weak, the rupee is getting weak. So I think the momentum is very clear that the rupee is slightly on the weaker trajectory. I would not be surprised if the rupee actually goes and hit around 64 or higher levels. So 63.90 remains a very important resistance for the rupee. But overall, I think it's on a bearish bias. So I would say buy on dips close to 63 for the importers. That would be the right strategy.
Abhishek, the markets do tend to surprise you, don't they? Because people were talking about crude prices going to $30 and beyond, and we are standing at $70 right now. And the rupee, which people thought wouldn't move beyond 62, is heading towards 64. Going forward, what would you want to watch out for the currency?
No, I think the factors that you mentioned, very clearly. So one is that, as I mentioned, that because of poor data coming from the US now, the US dollar is kind of weak. So euro is going up, the GBP is going up. And despite that, the rupee is getting weak. So I'm going to watch the global factors. So the dollar strength starts coming in, which will again come in as sooner or later. So that is one point. Another point is crude. Now, crude, which is inched up so much and it's already creating havoc in the market. And the monsoons, again, is a concern now. And the equity markets because of the outflows. So I think these three, four factors is what I'm going to watch on a regular basis. So I think once we see these kind of momentum continuing, I think the rupee I would feel that it will go move in the same direction what these data and these indicators show us.
Vijay, on the charts, how's the rupee looking? Because after making those initial lows that we saw last fortnight of 63.77, we've held on to that level.
Manisha, I remain consistent in my view. The prompt month futures on the currency derivative segment on the NSE is on track where the USD INR is concerned to go to the 64.5 levels, if not 64.70. I'm a buyer on dips. If at all I do get the May month futures below 63.10, provided at that point in time the screen justifies in terms of volume, open interest and price, I would start buying from 63.10 itself, failing which 62.90 I'm a ready buyer.
Abhishek, what's your sense? Because there are those reports talking about 65, 68, 69 as well going in for the currency. Do you agree with that?
No, I agree that the reports of 68, 69, which is there in the market, I think it's catching everybody in surprise. And everybody is not covering because there has been reports that rupee is going to 68, 69. So, of course, technically the patterns are showing that the rupee might have a big move going up. But, looking at the factors, I think I would like to stick around with 64, 65, which I feel is possible in 2-3 months time frame. But a level of 68, 69, it's very difficult to say at this point. But yes, one thing is for clear, and I agree with Vijay that rupee is weak and the US dollar is strong. So I think buy on dips, exporters, I think whenever they get a good move up, maybe a 64 or 64 half with good premiums, they can go look at covering long-term dollars when they're getting 67, 68 in the long term. I think that should be the broad strategy. And till the time 64 breaks, I think still it's in the band of 62 to 64. So once 64 breaks, probably we see a run-up of 1 rupee in the rupee. So we have to be very cautious on that front here.
Yeah, getting you back in the conversation then, rupee is one of the worst performers in Asia when we look at this quarter. Where do you see the currency headed?
I think that we're going to expect further interest rate cuts in India. It's going to be hard for the currency to boom dramatically. Maybe towards year end we're going to see the recovery of the currency. And I think a bit of that depends as well on where the US dollar is moving and where oil is moving. So high oil prices right now are undermining the strength of the currency. So the currency comes down in return of oil. And I think we're going to see this seesaw coming back again and the currency recovering accordingly.
All right, Jörg, we'll let you go at that. Thank you so much for staying on with us and talking about the currency as well. But coming back to you, Abhishek, and while you talked about the international cues and everything, how important would you watch out as the US non-farm payroll data on Friday? Do you think international cues would continue to bother us?
I think non-farm payroll data is expected to be good after the ISM numbers which has come out recently, though the trade deficit number for the US was not very good. So I think the dollar has gone a little weak in the last few days. Possibility there is some more room on the weakness of the dollar, even though the data might come good. We see on the charts that possibly the euro could move towards a 1.14 or the GBP could move towards a 1.54 types. So, but overall, I would say that this is more of a correction. So that the dollar weakness, what we are seeing in the last few months, I would say that for the last few weeks, is merely a correction, and the dollar strength resumption would start happening in a couple of months time frame. So I think it would not be a very, very big event in the non-farm payroll. I think possibly we wouldn't see much of a surprise coming in, but expectations are that the possibly data could come out to be a little good. But what is interesting to watch, Manisha, is that the yield difference between the German bonds and the US bonds, now that widening and narrowing is very crucial because that invites carry trade and unwinding of carry trade. So right now there's an unwinding of carry trade which is going up because of which the euro is shooting up. Now if we start seeing that yields coming down, then definitely there will be a carry trade again starting. So that is a very important thing to watch, that how the dollar is going to move in the international markets.
We will watch out for that. Well, that's what our experts are saying. The decline in equity markets, currency and bonds is something that has continued in the session today as well. With that, we let you go, Abhishek and Vijay. Thank you so much for coming by with your views on the space. And with that, completely out of time on hot commodities. Thank you for watching.